Hey, badass business owners, welcome back to the show. I want to talk about your expenses. And the reason I want to talk about it is you hear me say the number one calculation that I think you all need to know is sales minus cost of goods minus expenses equals profits. And I actually had a really good dialogue around this the other day, and I want to talk about it a little bit. And that has to do with expenses. I don't want you to have this false impression that you force your expenses into your pricing. I do and I don't, but let me explain what I'm talking about. On your P&L, it's going to tell you the flow of money through your business, right? It's going to show you all the sales that you take in, then you're going to subtract out your cost of goods, then you're going to take out your operational expenses, and that's going to determine how much pricing is left. So one of the things that we talk about is when you are pricing, because your revenue, your sales start with every single sale, then it only makes sense that each sale follows the same flow, that it's going to take out your costs and it's going to cover your expenses. And then you can get your profit that you want to try to get. Now, if your expenses are running you about 30%, we'll just use that as a number. If your expenses are running 30%, it's safe to say that from every sale that you do, 30% is going to go to your expenses. Well, when you're setting your prices, I want you to go, okay, my costs of goods, I'm going to have $20 of material. I'm going to have $120 labor hour. My costs are $40 and I'm thinking about charging $100. Well, if I'm thinking about charging $100, then I know right now I've got $40 towards cost of goods. And I also know I need to set 30% aside for the expenses. 30% of 100 is $30. So therefore, I'm going to have $30 or 30% of profit. And the reason we know this is because we just took 40% for our cost of goods, another 30% for our expenses, and finally that left the 30% for the profit, which is true. That's if your expenses stay at 30%. But here's the problem. Some of you are not looking at your expenses, and that 30% is higher than it really should be. So you might find that if you go clean up your expenses, you might be able to get that down to 28%, 25%, and I've seen cases where they could get it down to 20%. Plus, for some of you, your expenses aren't correct anyways because you're putting labor hours in there or not counting for those at all, which is messing up your cost of goods. My point is, if you have bad expenses, you're going to be using a bad percentage. It's really important that when I'm talking about you including your expenses, that you keep in mind, I'm making the assumption that you have already gone through and cleaned up your expenses. This is part one of it. There's two main things I want to hit up. So the first one is you need to make sure that your expenses are nice and clean, so you're getting a true percentage. Also keep in mind, most of your expenses do not go up when you do more sales. Your insurance will probably stay the same, for example. Yes, your gas might go up because you're doing more jobs. Your repairs and maintenance might go up, but not crazy up, but they might go up if you add a truck or you're putting more wear and tear on the vehicle. So rents typically stay the same. So what happens is when your sales go up, your percentage might go down because you're not using as many dollars to do your expenses. So you might start off doing the exercise at 30%, but as your sales go up, those expenses have dropped down to 28 or 25%. Now, another thing to keep in mind is it can be dangerous if you are putting in way too much for expenses and that's still not working for your prices. Now, I want you to be careful with this because you do need to cover them. If you can't change the number, I mean, if you've gotten it down to just the bare minimum of what you need and it's running a certain percentage, then yeah, you're going to be stuck with the percentage that you currently have. But once again, as we increase sales, that percentage will come down. So when you are setting your prices, just be careful that you're not way overcompensating for your expenses, which sometimes will lead to those people that have large tickets. Now, if your expenses are running 30%, and let's say your average job happens to be $300, and if your average job happens to be about $300, but you happen to get a bid of a lifetime and you get an amazing bid, and that bid happens to be for $1,000 or more than that, but let's just use $1,000 to make our numbers nice and easy for everyone to understand. And if your expenses are running 30%, then on that $1,000, your expenses are going to be 30% of that, or $300. But you may not need that much, because really that's like 3 jobs in one. And you may find that you're not going to use all of that money. So be careful, because if you set the price and you're like, wow, that just really makes you feel bad. Now, I don't mean that it just feels uncomfortable. I mean, it's like, wow, no, there's no way I'm getting this job for pricing it this way. This is crazy. And that's because you put those expenses in. Maybe you need to dial back those operational expenses down to maybe 20% or 25%, as long as you think you're still getting good money out of it. But you want to make sure it's in there. But I've seen some people where they have a typical job, and they all of a sudden get this opportunity to do a really big one. And when I say big, I'm not talking just double. I'm talking it's like 2, 3, 4, 10 times the amount, just because of what they get to do. In which case, yeah, you're not going to use all those expenses. Now, if you happen to have one where you're going out of town, or a big traveling, let's just say that you have to put your crew up somewhere to be able to do this, or you're making them drive, or you got to rent extra equipment, things like that, then yeah, you got to absolutely capture those type of expenses. They need to make sure that they're in there, because they are going to cost you. However, if you're not having to do anything extra that's going to really drive up your expenses from your normal day-to-day, then you can run with a lower percentage for your expenses in that bid. You don't have to go really high. It's only if you know your expenses are going to go up because of you doing that. Now, obviously, in those bigger jobs, a lot of times they're going to take more labor hours, but you're capturing that under your cost of goods. But I'm talking about the, renting stuff. You got to go to Home Depot, you got to rent some equipment, or you've got to put people up in a hotel, or you've got to rent a vehicle in order for you to be able to do it, or you have to do multiple dump runs or something like that. Be smart about it. But at the same time, I just want to make sure you know that you don't have to put in that crazy amount. My whole point of hopping on today was because I do think that there's a lot of times when we don't pay attention to our expenses. And for some people, they used to never pay attention to it, but now they at least have gotten a percentage that they want to do, but they're still not looking at it. So I applaud you for step 1, which is getting to know the percentage that you need to make sure is included in your pricing. But it's really important that you are taking a look every single month. Remember, your expenses are going to fluctuate month to month. The reason is not all expenses are paid monthly. Some are paid monthly. Obviously, a majority of them will be, but some are paid quarterly and some are paid annually. And if you have that big annual insurance that comes up that's $1,000, $2,000, then you need to be collecting that through the rest of the year, so that you have the money in the bank to be able to pay that big bill, or those quarterly bills that sometimes will come in that are pretty big. Sometimes people get really surprised by those, and you really shouldn't be surprised by those because they're so big. How you're surprised that you have this big ticket is amazing. To me, I find it very similar in our personal lives when all of a sudden our car registration comes up and we're like, oh my God, I don't have the money. Well, you knew it was coming. It comes the same time every year. You need to make sure that you're setting aside money for that. Same thing with Christmas. You know it's coming, so you want to save that money up going into it. And I understand times get lean. Sometimes we have to go through the money, but part of what you're trying to do is become better businessmen and women. And part of that is setting aside money for your taxes on a regular basis, setting aside money for large purchases that you want to try to get, and setting them aside for these bigger expenses that come every single year. Because once again, we're trying to run a better business. We're trying to look at our numbers on a regular basis. And part of that is I really need you to make sure that you're looking at those expenses. So I know I've thrown a lot out there in regards to this. So even if you just latch on to just one thing, please make sure that you know. Please look at your expenses on a regular basis. Make sure that you're using the percentage of what your expenses typically run when you're setting your prices, so that way you know exactly that you've got everything covered to make the desired profit that you're trying to make. Also, please make sure that you're being smart when you do the larger bids. I'll get people call me all the time that says, hey, this just doesn't feel right. This doesn't look right. Am I doing this right? Yes, technically you are doing it right. It's just you got to bring in that gut thing. Like I said, just because your expenses typically run that high number, if you're doing a large bid, you don't want to overprice yourself out of it because you're not going to need all that money, so you don't need to use as high of a percentage. All right, so a lot of good stuff here when it comes to your expenses. Just make the commitment that you're going to take a look at yours if you haven't looked at it for a while and really dive in, see if you can clean some of that up, get a good percentage. And really you're going for the average, because some months might be 25%, some might be 30, some might be 35, but on average through the year, it's 30%. Some people might have a month of 50 if they hit that big bill that comes up due. So just make sure you know on average what your expenses are running so you account for those properly, and using your P&L as a tool to help you do better pricing. With that, I am out of here, and I will talk to you on the next episode. Bye for now. Hey, badass business owner, before you go, as you know, I'm a huge believer in you knowing your business numbers. After all, it isn't about how much you sell, it's about what you keep. And the best way to grow your profits is to start diving in and understanding those business numbers. To help you on this journey, I have created the Know Your Business Numbers course. We will walk through how to read your profit and loss statement. You'll learn the key calculations that'll help ensure that you're making a healthy profit on all of your products or services, plus a ton of other good stuff that'll help you learn how to use those business numbers to create even more sales and profits. Just check out the link below in the show notes or visit knowyourbusinessnumberscourse.com. So if you're ready to increase those profits, it's time you start diving into your business numbers.